Morning, everyone, or good afternoon, depending on where you're logging in from. Really happy to have you all here today. For those that don't know me, my name is Katie Talati. I'm the Director of Research at Arca. And this morning, I've got Sasha Fleyshman with me. He is the Portfolio Manager for the NFT Fund that we recently launched with Arca. We wanted to host a webinar today because we were getting a lot of questions from investors who understand maybe at a high level about the NFT space, but we really wanted to delve in further and really explain the investment opportunity beyond kind of just the profile picture craze that people maybe have seen on Twitter and other places online. So should be a really exciting conversation today. We've also got some questions that we collected from participants that we can address at the end, but always feel free to drop stuff in the Q&A section of the Zoom. All right, so let's get started. Sasha, how are you doing this morning?
Wonderful. Good day to be alive. How are you?
Uh-oh, no audio.
No audio.
All right, well, while Sasha is working on audio, I'll just say disclaimer, none of what we say is investment advice or research. This is just meant to be an open discussion and educational and information session only. Okay, cool. Next slide. Okay, so Sasha, to start, if you can maybe talk to us about what is an NFT? As I kind of alluded to at the beginning, there's a lot of different potential use cases for NFTs, and I don't think a lot of people in the audience are maybe as familiar with them as they are with just the idea of NFTs being this scarce item.
Yeah. So I'm sorry, there's reverb. There we go. NFTs in a general sense are looked at like wrappers. A lot of people focus on what the front of the NFT is, either an image or audio, video. There's jokes about JPEGs and GIFs and this and that. But in reality, the bulk of the value in non-fungibles happens to be on the back end of the actual asset itself. In that sense, you can put just about anything inside an ETF, and in this case, anything inside of an NFT. So you're looking at things like real estate, provenance, contractual agreements. You're looking at utility programmable rights. You're looking at royalty distributions. So in that sense, you're getting a pretty malleable asset, and that's why you're seeing it be so broad in its use cases thus far.
Awesome. What are you most excited about, I guess, within the space in terms of potential use cases? Is there anything, any one particular use case that you find really out of the ordinary or interesting?
I think right now you're seeing a lot of very base case proof of concept with collectibles and VIP access and community-based token generation. I think moving forward, we've seen a little bit of a Cambrian explosion in gaming. I think that on a 5 to 10 year time horizon will be very impactful in the space. I also think that you're starting to see a bigger introduction of real world utility assets that give you, you own this virtual good, but it offers you physical rights. And in that sense, you have things like redeemables, so like luxury clothing and footwear you can redeem. You can also have it cross-compatible with your metaverse access. You also have like the Coachella NFTs. I think we'll get into that later, but you own the virtual NFT and it gives you a lifetime pass to a physical event. So I think the blend of virtual and physical will be massive in the next decade.
Awesome. Definitely very exciting. So maybe you can start by talking a little bit about kind of what happened last year in terms of NFT adoption and growth. We saw that, there was a lot of new, I would say, money entering the digital assets ecosystem overall. A lot of it went to NFTs. There was DeFi, as you spoke about gaming already. Stablecoins are obviously like a big topic as well. What were some of the kind of highlights for last year in terms of the NFT boom?
Well, a lot of people last year were first introduced to NFTs, similar to 2017, where a lot of entrants were first introduced to digital assets as a whole. Right now, you're seeing a lot of trial by fire. People are learning, the good and the bad of the space, how it works, how it operates, and it's pretty quick paced. So, with trading volumes, breaching $23 billion last year, that's no small number for a space that has been around since 2017, but not realistically until 2020, kind of on the onset of COVID. You're seeing venture capital prop up. You're seeing the valuations of those rounds be massive relative to what the space looked like even a year ago today. I think that as you move forward, you're going to see that kind of value trickle down from these private rounds into the actual assets themselves. I think right now it's just a bit of a cautionary move, just given that people don't fully understand how to operate within the NFT space. But I think that kind of blends later. And then lastly, you're seeing big name brands, Adidas, Nike. You saw during the Super Bowl, if you watched, Bud Light did their partnership with Nouns DAO. Bored Apes was in the background of the eToro commercial. So there's a few pop culture references as well. So it's starting to permeate all sectors of the space.
Totally agree. What did you think then of, do you think, how do you think Facebook moving towards a metaverse company and changing their name and transitioning their business, I'll say for the second time, how do you think that has driven adoption and interest in the space?
I would say awareness, it definitely helped. I would say adoption, not so much. I think Facebook made a very good marketing play, but I don't see the future of what this space looks to be being dominated by a centralized party, such as Facebook. So I think that they have their place. I also think they're going to find it a very hard time to grab PMF, at least from our native ecosystem. They might bring in new users, new adopters that don't want to deal with the intricacies, but I think that the true value gets unlocked by those that understand this ecosystem and kind of delineate the lines between their investors and their users. Katie, you're on mute.
Sorry, not as good with Zoom as I am with other video conferencing. All right, so I guess next we want to kind of talk about how do NFTs drive value? I think a lot of people to date believe that all cryptocurrency and a lot of NFTs potentially are driven mostly by speculation. And I think that we know that's not necessarily true. And I'd love to hear from you, Sasha, how you kind of think about the value behind specific NFTs and how they can be used in all these different use cases.
Yeah. So, right now the main focus in mainstream media and most likely discussions in your homes have been about perceived value. You're seeing CryptoPunks, Bored Apes, and the likes, and that's primarily based on scarcity, status, and then patronage. You get access to a community that you otherwise don't have, and this isn't a new idea. This is just rewrapped in a more visually pleasing way, I guess. But this is really entrance into communities, and that's more emotional value than it is intrinsic value. I think down the line, what you're going to start to see is things like, KYC documents or access codes to data rooms and things like that start to get wrapped into NFTs, and that's more intrinsically valuable. You have access to what we're talking about physical goods, or we're talking about reports, or a trip to somewhere. It could be your passport. Like these are things that are intrinsically valuable, and we just have different ways of representing them today, but that doesn't mean that they're the most tactical way to go about things. And then, you know, this is more looking forward, but functional value is starting to crop up in terms of utility. Again, I'll briefly mention, you know, Coachella's NFTs. I think we get into it in a couple of slides. You're also bringing in liquidity to otherwise untenable situations. You know, up and coming musicians can crowdsource the fundraise for their studio, for their equipment, you know, by selling NFTs that are loosely tied to their music as well as royalty rights. And then you also have things like compatibility, where, you know, I'm sure many of you have heard the term DeFi before. The difficult part about decentralized finance is that in typical, you know, lend borrow, you post collateral. And in this space, it's very hard to take real world assets and post it as collateral in the digital space. So when you're able to take out a, you know, 3.5% loan using a DeFi protocol, and you're able to take an NFT that represents your home against it, that's very valuable to people. I think that's more so down the line than today, but that's where the space is going.
Awesome. So next, I think we're going to talk a bit about the different revenue streams that can be derived from NFTs. And this is very interesting, obviously, because the way NFTs work as a programmable contract allow us to really unlock a lot of different value, as Sasha has kind of alluded to. So I'd love you to kind of walk us through how you see these potential revenue streams developing.
Yeah, so, you know, as the slide shows, you can basically split out the different types of revenue streams into three. The first being passive. You have programmable royalties, you have rent, you have staking to earn. So for royalties, you know, there are music NFTs where people can mint copies and you get a dividend on a bonding curve. You have assets that you can use, you know, to lock up, and as such, you either get intrinsic tokens underneath or you get a secondary NFT on top of it. And then, you know, things, especially in the metaverse, this is developing slowly, but in the metaverse, you can, you know, if you own plots of land and you're not going to be utilizing them actively, you can rent it out to people that would then, you know, make that asset productive. Moving down the stack, you have active revenue streams. You know, the easiest case is gaming. You know, the play to earn gaming style has definitely taken off. You know, in game, the better assets you have, potentially the more value you can unlock, and that's required through the actual use of those assets in the game. Governance, you know, more so the same as any other form of governance. The more you participate, the more you're rewarded. And then what we're seeing right now is in the AI sector, there's a learn to earn type of model where, you know, training your assets with iteration, and as it continues to evolve, how you take it down its path is a source of active yield generation. And then, you know, other is pretty open-ended. I think we're still like very brand new in terms of like the foundational rails as to what this space has to offer. But, you know, down the stack, you're already seeing, you know, Bored Apes being used as like a brand recognition tool. I think as you look further down the line, you're going to start to see other assets be aligned with brand deals. You're going to start to see people license out their CCO assets. And you're going to start to see collaborations between what you would call influencers and those that own blue chip assets in this space.
Yeah, it almost seems like we're getting to a point where some of these NFT projects or specific, they, as you said, becoming brand ambassadors. So instead of having a movie star represent your soda brand, it might end up being a NFT asset. But yes, I agree. There's some really interesting use cases. And I really think that when we started talking about NFTs, you and I, like a year and a half ago, there really weren't that many, but we kept saying it's such an interesting way of applying value that there's so many use cases still to be discovered. The same goes for tokenization as well. So very exciting for us to see that. All right, great. Okay, so I guess next we want to talk about how NFTs present this convergence of NFTs, Web3, and DeFi. and how this can democratize these investments. I think that we're definitely stepping into a new age in terms of really bringing technology to the dated financial system. I believe if any of you listened or participated to our other webinar or other online events, Finance on the Blockchain, that future is not so far away, where blockchain is being utilized in everyday finance. And so, we really think we want to talk today a bit about how NFTs are going to be, kind of that transformational technology for financial products.
Yeah, this was a good point brought up in the last couple of days online by the community, that the reason that we're seeing digital assets move differently than how NFTs have moved in the last 6 months, I think boils down to like intellectual hurdle rates, where things like NFTs, they don't have to do with LTV ratios. They don't have to do with buy side demand and flows and macro. Like NFTs are very social, and they're very like emotional value driven. And some people look at that as a knock on the fundamental value of this asset class as a whole. I look at it as in the best way possible, like a Trojan horse to get people involved in this space. So what you're starting to see is that DeFi is starting to integrate gamification to make it more interesting for users to actually interact with the protocol. Nobody in the broader space is going to go in and like the old school layout and go bond into a 3-curve pool and start to generate assets. But they do like the idea of going on quests to find yield, and it's the same mechanisms on the back end. So you're starting to see the front end develop using this gamification tool. You're also starting to see in pure financial models, Uniswap is a decentralized exchange using an AMM model, and their new positions are in V3 are NFTs. You own your position, which is a unique position against others, and so on and so forth. You're starting to see these assets permeate, because at the end of the day, we go back to the wrapper function, where these things can do quite a bit. And thus far, we've only tinkered with the edge cases, but we're going to start getting to like the actual meat and potatoes of what this space can do. And so we spoke about accessibility. Frictionless interoperability has to do with you can take your assets. You have your home in the real world. You also have it being lent out in the digital world. You can transfer these assets across, and there's really no like border requirements. There's no, I don't have to pick up my house and carry it across, the country. There's something that signifies its ownership using on-chain provenance. Shared ownership, it's going to become more prevalent as the space grows bigger. You're seeing some of the price action in the space and the unit prices of some of these assets. An NFT itself can then be further boiled down and fractionalized, which is actually 0.5. You can start to splinter out business models. The example I always used is, if there's a local Buffalo Wild Wings and I don't really care for their food, but they're the only bar in town, I can go invest directly in their alcohol sales and forego the actual food sales and the food costs. And you can start to get investors for very specific lines of your business, instead of having people come in over the top and investing in the whole thing. And merging users and investors, I think that's just a natural progression of this space as a whole, where you're kind of, Jeff Dorman, our CIO, always says that the investor at McDonald's isn't the same as the primary customer of McDonald's, and I think that's kind of the same thing in this space. Like you're going to see that the primary user base of this space is also the primary owner of the underlying protocol, and that has to do with the natural evangelization of products as you are directly motivated for them to succeed.
Excellent. Well, I think this dovetails really nicely into our next slide, which is kind of how can businesses in general be created or improved through the use of NFTs.
Yeah, I mean, I think there's definitely some opinions that I have, and there's also some untapped potential that not many of us quite understand the full parameters of what can happen. But um, the play to earn and this like guild function has been a very new onset to the gaming space specifically. Previously, you had games like World of Warcraft and RuneScape. These games had self-delegated DAOs where, before the DAO word even existed, you had people that joined chat rooms and they, joined clans and they, aligned together to meet specific goals. But there was no real way for people to organize in the sense where those assets had real world value and there were marketplaces outside of the game itself where people could trade these in-game assets. But there was nothing holding people to their word. There was nothing, promising people equal share or equity. And this kind of space allows for an already massive industry with 3 billion plus gamers around the world to now turn that sweat equity of all the time that they spent gaming to actually earn real equity. And I just remember being a kid and my mom telling me to stop playing games because it wouldn't really it's not beneficial. But now it's starting to become beneficial where people can make a livelihood off this. And this is not only in this space. You're seeing this in the broader, space at large. League of Legends is now an esports competition. You have Dota, you have multi-million-dollar ecosystems. Ninja is a Fortnite streamer who's the richest streamer of all time. Like this is beyond just our space. I think that our space just helps make this better. In terms of industries that already exist and are being disrupted, you're seeing the music industry hone in pretty keenly on this space, removing the intermediary being the primary benefit. Things like brand deals and things like signing an album deal, like you're usually giving up half of your value up front just because you cannot afford to actually do it yourself. You don't have the connections, you don't have the capital. In this space, you are able to have people that believe in you early, capitalize you up front, and then benefit directly as you succeed. That's rather important. You also have things like copyright law that, I'm not a genius on copyright law, but we're working with a portfolio company that helps us, dive into how NFTs themselves can act as copyright and act as, protectors of IP. And I think that's going to, swiftly take over what I think is a pretty legacy industry in the music space. And then content and research, this is more of a paper transaction type of model where, you can, if you spend 15 hours making a very in-depth report and, it's a monthly letter that usually goes out to, people that subscribe to your, newsletter or something. Instead, you can, make you can use NFTs or even POAPs, which are a type of NFT, to give gated access to your content without having to go through, send out the email and just pray nobody downloads it and sends it out to all their friends. So all these industries are going to start to tinker with this. I think that you're probably just scratching the surface of what's actually going to happen, but we're only a couple of years into this space.
Yeah, and Sasha, you brought up a ton of interesting points, and I think that what was very interesting and a lot of people don't realize about kind of the disruption to gaming specifically is that even to date, with the evolution of gaming becoming more of a professional sport in a sense, right, with esport tournaments becoming really large, you're still kind of cutting out like the bottom 99% of people that can't participate or can't make any income off their gaming activity. But that is actually possible now with tokenization, with NFTs. And I think that's really important, is that instead of only being the top one, you have to be in the top 1% in order to be a professional esports player. You can be in the top 40% and still make some income, or make a living off of something that you really enjoy and that you can really put time and effort into. So I think that is also a interesting aspect. So kind of onto our next slide. We're going to actually talk about why is it that professional investors are interested in NFTs?
Yeah, I can tell you that the primary driver for a lot of people is the massive amount of notional gain and even percentage gain that's been made in this space in a very short amount of time. I think most people first get drawn into these new industries based on the return value and the potential of the investment value. I think as you go along, you start to see people fully understand what's actually happening in this space, and that kind of shifts into, you know, fundamental value. You know, we've seen a massive amount of adoption in a very, very short time period. And it's not just been in non-fungibles, it's actually been in, you know, physical collectibles as well. On the onset of COVID, you've seen, you know, sneakers rapidly increase in value, the aftermarket on like StockX and other places. You've seen digital cards, sports cards, you know, scream higher in value. You've seen homes, you know, the CPI came in at 7.5%. Meanwhile, you know, homes are up 80% year over year. Like things with tangible value, things that are provably scarce are being just swept off the market without any, you know, second thought. And, you know, the common naysay is that, you know, this is just like Beanie Babies, you know, nobody really cares about the Beanie Baby at the end of the day. And I think that that's kind of missing the point. People want things just inherently. This is, you know, almost like a law of nature. People want things that other people do not have. And this comes down to homes. This comes down to the nice car, the cool new shoes, or, you know, the brand new album that's going to drop tomorrow, but you got it sent to you the night before. Like this is not unique to this space. What this space does is it hones in on that feeling and that belief, and it multiplies it. And so the last key point is that, you know, there's a ton, and I mean a ton, of information asymmetry. You're having people that don't know anything about the space come in and say, I read this CNBC article that said that, you know, the metaverse is going to be the next big thing. So I went and bought sand tokens and mana tokens. And, you know, I always ask them, why didn't you look at the land? And they said, what land? And you're starting to see people that like know the names, and they know like the 2%, like top level, like the buzzwords and what connects to what, but they don't really know what they're saying. And in terms of like actually going into projects, they don't know what they're buying into. A lot of people look at what you see on the front, like that's a nice picture, or like that, you know, it looks rare, or this or that. Like that's not really the point. And so, you know, those that have figured it out, and what I guess we would be calling professional investors, if you can scrape that away, you probably still have a year or two before the game gets competitive. Like a lot of the value in this space has been flowing from, you know, private into the equity, or into, you know, private rounds, or like nobody's really geared up to invest directly in NFTs yet. And I think you're seeing a massive information and value asymmetry as a result of that.
Awesome. So I think the last piece that we were going to talk about here, kind of in our more programmed time, is a little bit more about NFT use cases. So Sasha, you alluded to a lot of these, I think, throughout the presentation so far. But why don't you take everybody through some of these examples below?
Yeah. So the one that I didn't really get into is the digital identity one, and this is an idea that, you know, I truly find interesting. I'm not sure if it exists yet, and I think it's going to be a bit of a while before it comes to fruition, just given how KYC actually works. But, you know, being able to mitigate risk is a very interesting use case for non-fungibles. When you think of NFTs, you think that, oh, like I don't want to display my, you know, my social security number on like on a picture in my digital wallet that's, you know, the whole world can see. But there are things like shielded NFTs where you can actually have your data stored in the back end of the NFT, and you can have your pretty, you know, animal picture on front, but in the back is the actual information to something that you are required for. And, you know, especially with the Equifax, you know, data breach a few years back, you know, I was personally affected. My dad was personally affected. I'm sure there's a lot of people here that were personally affected. And a lot of that came down to the fact that we store very, very important information across multiple, you know, counterparties, websites. You know, people put the passwords in Evernote or on Dropbox. Like it's dangerous. And, you know, the new social security number of this age is like your phone and your SIM card. And now it's starting to move to your to your address and to your, you know, into your social media handles. So I think that you're starting to see people understand that the old way of doing things is starting to become outdated. SIM swaps are too easy. These data breaches are, too frequent and too damaging. And having an ability to put in things like passports and KYC into an NFT allows for, removal of this multiple point of failure type of ecosystem and kind of bring it back down into like a self-hosted asset. Collateral and IP we talked about, and then utility I want to get into a bit. Coachella did an NFT drop last week. They dropped, among other like physical redeemable posters, they dropped these 10 keys, and each of the keys gave some sort of rights to Coachella. They all had the same base right, where they all gave you 2 lifetime passes to every Coachella event that they do in perpetuity, basically. But each key also had separate value, where some was just the 2 tickets, some also got you a backstage pass, some got you a cabana, some got you free drinks or this or that. Some were only for 1 year for those extra use cases, some were forever. And you're kind of finding a way to have you can almost look at that as like a bullish bet that people will continue wanting to go to Coachella in the future, and that it'll only become more expensive because the amount of people that exist in this world does not really go down. And Coachella is only one place, and it can only be a certain size. And the rate of growth of people that want to go visit Coachella is smaller than the rate of growth of Coachella itself, or bigger, I apologize. So what you're starting to see is that you can now take active bets on things that you weren't previously able to get exposure to. And if you like Coachella, in the meantime, you can go every year and take a friend for the next decade until you actualize that bet.
Awesome. Yes. And I think that we're going to be continuing to see interesting and innovative use cases like this. Actually, one potential use case that I recently came up, Sasha, one example, not as much in the, or as a replacement for your social security number, but Aave protocol recently launched a social media platform, and all of your data on that social media platform is actually tied to an NFT, which I think is an interesting evolution of our online social profiles, which, lots of questions that come up these days, especially with how these platforms own our data and what they do with our data. Anyway, I believe that wraps up the programmed content for today, which is great because we have a ton of questions from the audience. So hopefully we'll get to all of them. I'm just going to pull up this list here. So just to let you guys know, I know some people asked in the Zoom some questions. We had people submit questions ahead of time. So we're going to try and address some of those first. And then we'll go to the questions that were asked during the presentation. Okay, well, we can start with this one question. As to the Equifax breach example, how do you see the uptake or cloud data migration being affected or not by NFTs?
There's been previous attempts, not so much in the NFT space, but there has been previous attempts where things like Sia Coin, Stratus, I'm sure there's a few others that I don't have on top of my mind, but there's been a few iterations of what that's been trying to do. I think Akash Network is loosely involved with this. I'm not sure if NFTs themselves will affect this cloud data migration. I think that what you're going to start to see is like shielded assets being used on cloud data. Like the cloud is actually pretty, this is an opinion, but it's a pretty innovative push forward for how we use the internet. I think that the issue is that a lot of that information is more or less easily breached, and fixing the breach as opposed to fixing the actual cloud data section as a whole, I think is going to be the primary focus.
Excellent. Okay. So first question we have that was submitted before the webinar, how do you define long-term versus short-term in this space?
Yeah, this space moves so fast. Short-term, ideally for someone like us, we're looking at 3 to 6 months, and obviously if things monetize before, or if events change, the space does move very quick. You have to be, actively managing your positions. But 3 to 6 months is, short term enough where you're still getting the, investment opportunity that you're looking for, but you're not, wedded to your position. Anything shorter than that would probably be a trade or an event. Long term in this space, to really, really call it long term, you kind of have to look at like multi-year investing. It's very hard to do in a space like this where multi-year doesn't really exist. But if you really want to look down the line, it's you have to bake in the fact that this is going to be a very volatile space in the beginning. You're going to see big swings up, you're going to see big swings down, especially when you have assets based in the underlying, which is also, moving with the volatility spectrum. Like it's going to be very choppy, but it all depends on how confident you are in your thesis that what you're investing in is a long-term winner. And so we look at those as, 2 to 5 year plays.
Great. Another kind of related question then is, we currently see a lot of new projects flooding the NFT markets, accompanied by a lot of speculation and flipping, especially in PFP projects. For institutional investors or even long-term non-institutional investing, what would be a sustainable way to approach NFTs in your opinion?
I think that PFPs, which stands for profile pictures, PFPs and the collectible space as a whole isn't so much investing as it is collecting. And that doesn't mean that there cannot be investments in that sector. What I think it means is that if you're a fundamental investor, you're going to have a very, very hard time coming to terms with 95% plus of those assets. A lot of them are speculative bets. You'd call them all 100 baggers. You'd buy a couple of them from each, and you just close your eyes and hope you do well. I own a few collectibles personally, and I've never once thought of those as like core fundamental investments. Those were either community plays, or they were you like the picture, this or that. But I would focus as an institutional investor. I'd focus on the dozens of other sectors that represent themselves in this space. You have the metaverse, you have art, you have royalty backed, you have DeFi integrated, you have AI, you have social utility tokens. Like there are there's a whole swath of selection in this space. I think focusing on collectibles is going to be painful for a lot of people, because that space only has so much saturation it could take.
Great. Then kind of a slightly different question here. Which blockchain are NFTs favoring, if any?
Yeah. For as much flack as you hear about Ethereum online, you hear that Solana or Avalanche or this or the next killers of XYZ, all the, like a vast majority of the value is being determined on Ethereum today. And I don't expect that to change too much. I think that you might see it lose some of the pie to things like Matic and EVM compatible layer ones. But for the most part, NFTs in a sense are very ecosystem based, where you need the connection of being able to make your asset productive. And right now, all that value flows on Ethereum. So to have it move away, there has to be a pretty big seismic shift in where value is flowing.
Great. What is the connection between NFTs and cryptocurrency?
Just about none. I think that they're both digital in a sense, so they are digital assets. I think cryptocurrencies solve a completely different function than what NFTs do. Things like Bitcoin are a pretty binary bet on what you think money is going to look like in the future. I think you can't really attribute the same methods of understanding to something like Bitcoin as you can to something like a cash flow producing, in-game asset that's based on like daily active users, or like a Coachella NFT that's based on the dollar price of the ticket that you're paying for. Like those are completely different drivers. And I think this is a misnomer that's pretty much prevalent across all of the sectors in this space, where we compare cryptocurrencies like Bitcoin to digital assets in any sector like DeFi or CeFi. Like these are much different assets. And, I think that's more of a nomenclature issue than it is a actual fundamental thought.
Great. Some of these have overlapping answers, so let's see. Where do you see opportunities for investment in physically backed NFTs in 2022 and beyond? What risks do you foresee in this sector?
Yeah, I think that, physical NFTs are very interesting in the sense that I think they're going to become very investable in the future. I think that at the same time, that's probably more of a focus of personal investment than it is for fund investment. Someone like, Arca, we can't, there becomes an issue where you buy the Coachella NFT, but you can't access the actual value of the NFT. I'm not going to go to Coachella and tell my investors, thank you for paying for my Coachella ticket. We own this NFT, but I'm going to go instead of you guys. Or like if I buy luxury shoes on the blockchain, using NFTs, and then I go redeem the shoe, who gets the shoe? Am I going to keep the shoe and say thank you? Like the physically backed NFTs are typically more personal investments than they are, institutional or broad investments. You can play the marginal buyer game there, but you're just kind of capping off the value that you're actually receiving. I think as we look forward, if you start to see things like, NFTs that are backing real estate, things like that, you'll start to see, institutional eyeballs start to fall there. But right now it's more personal. Like I bought a pair of NFT shoes for probably way too much money the other day. And, I would never pitch that anymore. It was something cool as like someone that finds shoes interesting.
All right, so we're going to take some of the Zoom question now. All right, so from anonymous attendee, real estate is a big theme with NFT investors. Proppy just launched the first property NFT sale in the US. What challenges do you see with NFT real estate from a logistical, practicality, and finally a regulatory perspective? Yeah. We actually had an interesting real estate NFT opportunity pop up last year, didn't we?
Yeah, I was actually going to bring that up. The Shane Dogeroff NFT in the Valley. Mm-hmm. So this is I think this is going to be a massive, massive sector in this space. But right now there's too many problems. And the way you can boil it down is that when you normally purchase a home, you have mortgage rates, you have, down payments, you have structure, you get to inspect the property. You have this whole like slew of things that you can do before you finally sign that paper, purchase the asset, and most likely get put on a payment plan for, up to 80% of the home value. In this space, you kind of have to close your eyes and buy the entire home up front and just pray that everything's fine. Like when you're buying an NFT home, you're not really, you don't get to inspect it, it's virtual. Maybe you can go inspect it during the auction, but you typically have a couple of days. You're putting up the complete value of the home up front. So, if it's a $3 million home, you're putting $3 million down. And it just drastically reduces the TAM of that industry. I think that all of this is going to be fixed. I think right now it's not. And from a regulatory perspective, I think, Proppy actually sold a home in, I believe it was Ukraine, to Mike Arrington from Arrington Capital. And I think that was 2 years ago. And, that was very interesting. That house he bought straight up front, and that, the Ukrainian government recognized it. I think the US government is going to have a much more interesting time recognizing a home purchase using an NFT. I think right now what you're seeing, the way to get around it is that people are using NFTs that are backed by physical, housing deeds. But even that is like, there's probably gonna have to be a court case or two to decide, how we're gonna look at that moving forward. So it's a big question mark right now for just about everybody.
Cool. Next question we have is, this is a helpful framework on how the space will evolve, but is there a framework on how to invest?
There's definitely a framework on how to invest. I think right now people are trying to take all of these subsectors of this space and kind of mold them together and have one basic framework how to invest in all of them. And I think what people realize as they get involved is that every sector moves on its own heartbeat and has like its own drivers and its own value. We actually, this is one of the few spaces where I have seen, massive sector rotations and massive, independent, idiosyncratic movements across sectors. So like the way that I would look at like artificial intelligence backed NFTs is not the same way that I would look at like gaming NFTs. And that's not the same way that I would look at infrastructure. And that's definitely not the same way I look at metaverse. So like they all have their own valuation methods, and you can use traditional methods. I think that you kind of have to do a hybrid. I think looking at this whole space, which is a brand new space in a traditional sense, will get you hurt. And I think that mostly has to do with the fact that most of the people that are driving this new space are not from the traditional space. And as such, they don't really follow those kind of rules. And maybe we can have the belief that one day they will, and that we're gonna make them bend the knee or tame the horse. But I really don't think so. I think that a lot of us are gonna have to learn new tricks. And so I'll leave it there. It's an answer that's longer than the time frame we have here.
Great. So the next question we have is, how do you expect DAOs will affect the trading of traditional non-digital assets?
I think you're seeing what we like to call like single purpose DAOs step into the forefront. You had Constitution DAO that tried to buy the copy of the U.S. Constitution. You have Links DAO, which is a Mike Dudas run project, who they're going out and buying an actual golf course, and they're partnering with like Top Shot or Top Golf and things like that. You have all of these DAOs that have like very specific purposes, and they raise capital and they execute that purpose, and then they dissolve. I think generic DAOs are having a real problem with like governance and how to actively participate. I think a lot of them are just as of right now Discord groups with additive value, but the issue is that if Discord goes down or if there's a riff in between, everything just comes to a screeching halt. So I think in the future, DAOs are going to be very impactful. It's basically syndicate. I think that right now, trying to corral everybody is proven to be very difficult.
It's like herding cats, as they say. All right. Another question we have is, should the NFT space be considered another asset class similar to Metaverse, Bitcoin, or others? If so, what could be a comparable future size?
Yeah, I think that the NFT space is kind of the sum of asset classes. Or if you're going to call it, I personally believe it's a wrapper, similar to an ETF. And if you're going to call it a wrapper, that means that it's pretty sector agnostic. And at that point, you can obviously, I can give you some massive number in terms of future valuation for the entire sector. I think that anything I say is going to be, either too big where people are going to laugh at it, or too small because I believe it's going to be much higher. So I don't like to put numbers on those type of things. I think it's going to be orders of magnitude larger than it is today. And I think that's without growth. I think that even without growth, it multiplies just because so little of this world has already tapped into that space. If the housing market gets involved in NFTs, that instantly makes everything that we've done up until this point look small in comparison. So I think that we're not even close to seeing what the comparable future size is, but it's absolutely a different asset class, and it shouldn't be compared to the fungible digital asset market, because there's different key drivers to the value prop.
Great. We have another question here regarding IP. How is it prevented that two identical NFTs are created / minted? How is IP enforced if an NFT is created that breaches unauthorized use of another party's IP?
Yeah, that's a great question. Identical NFTs are rather impossible. I think that goes back to what you're talking about in terms of front end versus back end. You can have two NFTs with the same exact front end, and it'll be identical in those terms. You're seeing a lot of copies of Bored Apes. You're seeing a lot of copies of punks. You're seeing people rip, other people's ideas. I've seen Jackson Pollock paintings all over the ecosystem, but that's just the front end. That's usually assets that are hosted on Arweave or hosted at IPFS. Like that's just a pointer. The back end is the actual meat of what an NFT is, and you can't really duplicate that. That has provenance on chain, that has a timestamp, that has metadata. You cannot just copy the exact back end. And in terms of how IP is enforced, that's going to be a fantastic realization by this market. I think that expensive IP will be easily enforced, but if you have intellectual property on like a $5,000 asset and it gets breached, it's going to be more expensive for you to go after that person than it is to just let it go. So I think what you're going to start to see is, unless if one day there's an automated process for IP takedowns using NFTs, I think what you're going to see is that the manual use is only going to be for like companies and big projects that are protecting their brand, as opposed to individual artists. It's just going to be too expensive in the beginning.
Great. We have another question here. How do you handle custody for NFTs? Do you see the NFT space as mostly a buy and hold strategy for underlying, or actively traded in any way?
As alluded to earlier, I think it's a healthy mix of the two. I think being able to blend short-term and long-term investing is kind of what makes this an active management type of gig. I think that in terms of custody, you're seeing a lot of people are doing self-custody, for better or for worse. We have a lot of new entrants in this space, and you're seeing a lot of what people are calling hacks, but what really are just phishing attacks and educational learning curves for a lot of these people, which doesn't mean that they did something wrong. It just means that they're brand new to this space and didn't take the time to understand what being the governor of your own assets really means. And so there's educational lapses, but in general, you can self-custody either in hot or cold wallets. There are custodians out there. There are lend borrow desks that like the infrastructure is building out. So it's not required that we have to own all of our assets in a MetaMask and just pray that we don't click on a bad link. Like there are real security strategies to take.
Great. Another question here on DAOs. DAOs are intended to give token holders a vote or say in governance. If you wanted to issue NFTs for a particular project or endeavor, do you need to create a DAO, or can you apply the same concepts to the syndicate of NFT holders somehow?
Sorry, I'm just reading that question back. I'm trying to find.
Yeah, a little confusing, but maybe you can talk about how DAOs have been used to acquire NFTs to date, and if that's actually necessary and why people would potentially use that route.
Yeah, there's, we spoke already towards like single-use DAOs, single purpose. There's also, stuff that are more close to syndicate DAOs. You have Pleaser DAO, you have Flamingo DAO, you have a whole bunch of them, and it's just a better way to acquire these, high-priced assets. We said earlier in the deck that, there's going to be, shared ownership, and that's what you're seeing in live action, where you have some of these assets that people consider to be the holy grails of this space. Imagine if 300 years ago, when people were like, oh wait, like Picasso is actually a pretty good painter. You could say, I can't buy a Picasso myself, but I think it's going to be worth more in 100 years from now. So I'm going to go buy it with my whole neighborhood, and we're all going to, we're going to host it in the museum somewhere, but we all own a piece of it. That's kind of what you're seeing here, where people think that, for better or worse, this is the next Picasso, or this is the next this. And, maybe the unit price is 200K and they only want to put in 10K. So they raise a special purpose DAO and they start to acquire these holy grail assets. The value there is definitely massive. You're not just talking about collectibles and art. You can do that for just about anything. But I can't yet speak to whether or not you need to do a DAO to actualize that concept, or if it's just a form of usage.
All right, we're going to do one more question. Just looking for a good last one. Sasha, why don't you tell us about, or can you share with us, what are your, maybe favorite projects? Why don't we keep it broader? What are your favorite NFT sectors? And how do you think about diligencing projects in the space?
Yeah, I mean, that's a meaty question to do 1 minute before this is over. But, the things like gaming, I was very big on gaming in the metaverse when I first got into this space. I'm still very big on that space. I think that right now, you're seeing massive valuations due to the success of a few. And I think that that gives me pause for the short-term outlook on that space. But I think long-term, absolutely massive potential. I think that AI NFTs are also massive in terms of giving a lot of these assets productive value. And I really do like the utility tokens. I think that utility tokens in the fungible space have been a bit of a, it hasn't realized its full potential. I think that in this space it does. I think that having assets that are unique in nature, that have real utility, will be massive in terms of value flow. And that's where I've been focusing a lot of my time. And in terms of doing due diligence, I wish I could answer that. That's a hour-long call of its own.
Sounds like we have some good content for a follow-up webinar potentially. Anyway, thank you everybody for attending this morning, this afternoon, whatever time zone you happen to be in. We, hope that you found this informative and educational. At Arca, we're definitely big on adding educational materials, specifically around the NFT space. So if you would like to check out more about NFTs, please visit our website at www.ar.ca/NFT. We'll be adding additional NFT resources in the weeks to come.
Awesome. Thank you.
That's all we have for you.
Yep. Have a good day.
Have a good day, everyone.